This week, I sat down with Larry Connor, founder and managing partner of the Connor Group, one of the top luxury apartment investment firms in the United States. Larry started in 1991 with $400,000 in three apartment communities in Dayton, Ohio. Today, the Connor Group manages over $5 billion in assets, outpacing firms like Brookfield and Blackstone with 30% annual returns over the last 40 years. Out of 241 acquisitions, they've lost money on only eight. Beyond real estate, Larry is one of the most accomplished adventurers in the world. In 2021 to 2022, he became the first person ever to dive to the deepest part of the ocean and travel to the International Space Station in the same year. He's won national racing championships, competed at Le Mans, and is planning to dive to the Titanic wreckage. In this conversation, we talked about how a catastrophic business failure taught him everything, why being different is the only path to exceptional results, the strategies that create 60 to 80% margin improvements, how he built a culture of extreme accountability, his philosophy on risk, and much more. If you enjoy this episode, please follow the podcast and rate it a 5 stars on Spotify, subscribe on YouTube, and share it with anyone who might find it valuable. I really enjoyed recording this, and I hope you guys enjoyed listening. Thank you. Thanks, Larry, for joining me. Really appreciate it.
Happy to do it, Amir.
Well, I want to start off where I always do, the beginning. Your father was a Marine, if I'm correct, who fought in the Pacific during World War II. Your mother served at the
True.
Red Cross in Europe. The child of two people who served in pretty profound ways. How do you think that shaped your perspective growing up and what was growing up like?
I think it creates respect and appreciation. They never really talked about that. So we as kids really didn't know much about it. Uh, and then get to adulthood, learn more about what they did and how they quietly served. But both of them, in their own way, made a significant impact, for the safety of, America. So I think you take those lessons with you.
And what was growing up like for you? What kind of environment was it?
Oh, I think it was, really a pretty typical middle class, go to school, get good grades, things like that. Not that I did, because I didn't get good grades and I wasn't a very good student in grade school or high school. Uh, but, my parents believed in the American dream and, own your own home, get a college degree, pay for everything, do the right thing, help your neighbors. So I think by being in that environment, you take away some lifelong lessons.
And you mentioned you weren't a great student in middle and high school, but you graduated, if I'm correct, summa cum laude from Ohio University, and you didn't major in business as many people would expect, but rather English and history. I'm just
True.
interested in talk me through that liberal arts education. How do you think it influenced the way you think today doing real estate?
So the backstory is I went to a high school, a good one, here in the Dayton area. And the students there, the vast majority of them were going to go to college. And so they went and they were looking at different colleges. Well, I didn't have that problem because there was no college that would take me except one. In the state of Ohio at that time, if you graduated from high school, Ohio University, don't be confused with Ohio State, it's about an hour and a half away from Ohio State, had to take you. So, literally at orientation, they told you look to your right and look to your left. One or both of those students will not be here at year end. So that got my attention because I think my parents had drilled into me, and I'm not sure this is correct, but understandable. Like, hey, look, you got to get a college degree. And if you don't get a college degree, you're not going to amount to much anything. So I flipped the switch and became very focused and dedicated to getting good grades and participating in other functions. I got straight A's for, I think right at the end of my junior year, I finally got a B. And the only reason why I ended up at a 3.4 versus a 3.6 or 7 is that senior year I kind of coasted. And but yeah, and you're right. With the value of hindsight, I should have pursued either an economics degree or a business degree. But I was trying to find the curriculum, which I decided was the easiest one where you could get the best grades was liberal arts. So I was an English major with a concentration in Shakespearean literature, which, as I've said in other interviews, qualifies you for nothing. But anyway, so I actually think if somebody was to ask my opinion, the college experience, you can learn as much, if not more, outside of the classroom, kind of living alone, living away from home, living with other people than you do in the academic arena.
And after you come out of college, you start your first couple businesses. The one leading up to what ultimately becomes the Connor Group, the one before that was Orlando Computer Corporation. Um,
Mhm.
Ran that for 9 years before it ultimately failed. I'd just be
Yep.
interested to hear about those first couple experiences. And you call the Orlando Computer Corporation your PhD in the hard knocks of business. What does that mean?
Yeah. Well, you've done your research, which good job on that. But yeah, that's absolutely right. You know, there is no better experience than experience. And you frankly learn more from your failures than you do your successes. And even before Orlando Computer Corporation, I had owned and operated a couple of businesses and done really well with them. So the foray into the computer industry was something I knew nothing about. And we were in the wrong place at the wrong time with the wrong plan and way too little capital in a fairly capital intensive business. And ultimately, we went out of business. We didn't file bankruptcy or anything, but all of my capital that I had made, all of the investors' capital, we lost. And it was exceptionally difficult, but those life learning lessons has really helped me succeed since then.
And what were those lessons that you learned from specifically Orlando Computer Corporation?
Yeah, so fundamentally, you succeed or fail based upon what we call the four P's. And they are people. If you don't have the right people in the right positions doing the right things, you're not going to be successful, regardless of the chosen endeavor. Two, you got to have a plan. By the way, it has to be simple and executable. Three, you need processes and systems. And whether it's how you deliver customer service or how you sell or how you manage inventory or whatever it may be, you need some processes. We didn't have the right ones and enough of them without being burdensome right away, by the way. And last, you need perseverance. That we had. The first three we were short on. And so perseverance carried us for 9 years. But since that time, in the various businesses, and not only have we had a real estate investment firm, we've started two other technology companies, both of which have been very successful. One we still have today, the other one we sold in 2018 to private equity. We've really focused on and maximize the right people, the right plan, the right processes.
And on the topic of perseverance, after Orlando Computer Corporation failed, in 1991, you founded Connor Murphy and Berman, one investor,
Mhm.
$400,000 to
True.
buy three apartment communities. Talk me through kind of the beginning of what ultimately became the Connor Group, and what was that specific insight where you were like, I can succeed where most others are failing?
So it's an interesting question. I and another fellow, Jim Murphy, decided to start that. Bob Berman, the third guy, he was the guy who was the financial backer. And so I went to Jim and I said, I think the real estate investing world is a good world to be in. And I think we've run businesses successfully. So my observation, having bought some real estate kind of part-time and on the side, is they're pretty archaic in how they operate, and that we could bring a whole new business model specifically to running apartment communities. And so we started the firm with the idea that we were going to build it all with people who have never done it before, who weren't encumbered by preconceived notions on how you ought to deliver what we call resident satisfaction or customer satisfaction. In fact, we never call them tenants. That's what the industry does. And how we could add value and how we could find new sources of revenue and how we could keep the resident longer than most apartment communities that just kind of turn over 50 or 60% of them a year. And and all of that happened because of the prior business experience, both, success and failures.
And what were those? What was that first like big deal, or what was that first landmark deal for you?
So,
Yeah.
so it's really interesting. At the time, this is 1991, there was a savings and loan crisis in the United States. And so we were buying three apartment communities from a S&L in Kansas City until one Friday. And we had worked on this deal for like 6 months. And this S&L had taken these three apartment communities back in a foreclosure. But two of them were in great locations and the other one was okay. And so we were tidying up the final details to close. So we called the S&L in Kansas City. By the way, they had about 400 employees there, and nobody answered the phone. And we're like, that's not a good sign. 400 employees, nobody's answered the phone. So we spent the weekend trying to figure out what's going on. And it was, I don't remember, it was Monday or Tuesday. We get a phone call from this thing called the Resolution Trust Corporation, RTC. And they go, by the way, maybe it was a phone call, maybe it was a written communication. On Friday afternoon at approximately 1 o'clock, we seized the S&L in Kansas City. I forget the name of it. And so that started a year journey, a difficult year, because you couldn't even find someone to talk to. And then once you did, it's like, wait a minute, we're taking over these loans. You're going to get made whole. This is exactly what you want to do. Well, unfortunately, like some, not all government agencies, it's more form over substance. Long story short, in every problem, Amir, there's always an opportunity, what we call a silver lining or hidden gift. You just have to find it. Many times it's not apparent. So we spent a year finding the right people, building a relationship. Almost to the day a year later, we closed. By the way, the property operations had actually materially improved, which means the property was probably, the three properties in the aggregate are probably worth 1.5 million or $2 million more than what our price is, not only do we not have to pay more, we negotiate another $1 million discount from the RTC. So the
And
moral of the story is stay in the game, figure out a different solution, and have perseverance.
I guess this is much more of like a personal question, but you persevered through your first few businesses. You persevered during this period, during your first deal, when many others would have given up. Is it innate your perseverance, or where do you get it from? Why do you think you persevere?
Well, I don't think it's an exclusive club, but I think it's an important club to be in. I remember reading a quote from Charlie Munger a few years ago, and he essentially said the following: everybody in life struggles. The key is never quit. And that's what most people don't really realize. Like they think you have to be some brilliant guy that went to an Ivy League school to start and build really successful business. By the way, it may benefit you to go to Ivy League school and to be super smart. But the reality is, the people that we have seen successful, whether it's in business, not for profit, sports, whatever, are those people who have great perseverance, determination, grit, work ethic, rather than necessarily, money or pedigree. And so when I talk to people about starting a business, building a business, many times we talk about those fundamental building blocks. And it's certainly been, our case. Not that you want to do it, but the reality is if you're going to do anything exceptional, one, it will be hard. Two, you will have obstacles and adversity. Three, if you persevere and you have a plan, your chances of overcoming those are pretty good.
Never heard truer words. And I'm interested in what the average deal looks like for the Connor Group. So, what does like a typical deal look like? An acquisition?
Sure.
What draws your attention? Diligence, and then
Yep.
ultimately, what levers do you pull to improve the
Yeah.
margins?
So again, good question. So the average size deal that we buy today is about $85 million. They generally tend to be more suburban than urban. And so what we buy is, and how we describe it is, we buy great properties in great locations that are really underperforming to their potential. What does that translate into? That means their expenses are too high, their revenues are too low, and their what we call customer satisfaction or resident satisfaction is bad. So, frankly, the more screwed up it is, the better we like it. So if we walk in and we go, unbelievable location, great physical facility, floor plans, amenities, everything, and just terrible operation, there's a high likelihood that's the property we'll buy.
And so, you think your strong suit is operations, and then how do you improve operations?
So it's a two-part really answer. One, yeah, our foundation was built on innovative, different, we think better operational strategies. And the only way to do that is to have the right group of people, whether it's on sales, service, or leadership. And so we have spent our career in trying to hone that and refine that. But again, I come back to what we talked about earlier. People are the number one key to success. This is not an individual game, it's a team game. Two, we believe that we are exceptionally disciplined investors.
Mhm.
So I'll just give you one example. In a typical year, the last couple of years haven't been typical. We'll receive information. We operate in 16 cities around the United States. Receive information on 700 to 800 potential properties to buy. We will actually, in our analytics department, underwrite probably 300 to 400 of those. And then literally, we will go and visit physically probably 200. From all that, we'll probably buy 8 or 10. So literally, if you think about it, we buy the 1%. And so again, it's discipline, it's focus, it's hard work, it's perseverance to extract the kind of returns that we've done. And so people will ask us to finish the thought, well, what are your returns? Well, they're outliers. So if you look over the last 30 plus years, we've been in business 33 years. Our return to our limited partners after fees is 30.4% annually. And if you look at the last 10 years, it's 35%. And if you look at the last 5 years, it's like 39%. So, you've done enough interviews with people from other investment fields, and whether it's venture capital, private equity, you name it, that I think that's rarefied air we're talking about.
Very much is. And just to clarify, what do you think it is that you're doing? You think it's that focus on people? You think it's that 1% that most of the other big firms are not to achieve these returns?
You cannot be exceptional and do the same things as other people. So our model is radically different than what the average operator does. That's why I would hire nobody from the industry. Think about that. We build a business and never hire anybody from that industry. And the reason why is, by the way, there's some nice people there, but what we do is so different for people to make the mental switch to what we're doing is next to impossible. So you got to be different. Two, discipline, focus. If you look at 100 deals and you only buy one, that probably makes that standard. Three, hire exceptional people and share the wealth. For example, we have a partner program. Anybody in our firm can be a partner. We literally have two people who are groundskeepers. They're the people who pick up the grounds at our apartment communities. They are equity owners in our firm. They've earned it. They're elite at what they do. And we have sales, service, management. We have people in accounting, recruiting, you name it. We've got about 70 partners out of our 400 associates. And so it's a real differentiator. But again, you have to treat these special people different.
And when you're interviewing people who don't come from the industry, what qualities are you looking for to make sure that they're exceptional?
Yeah. So let's just take what we call a general manager, somebody who's going to run the apartment community. Well, the first thing we think about is, hey, this is a $85 million investment. So they are going to run this business, an $85 million business. So they got to think like an owner. So we essentially have what we call the big eight. And I'll run through them pretty quickly for you. And by the way, they're all important, so don't get hung up on what's first.
Yeah.
Number one is they got to be able to motivate people and manage them. People work for people. Two, they got to be highly organized and multitasking. Even though we're in a low-tech business, we run a pretty complex compressed system. Three, accountability. They got to have self-accountability, and they have to be able to hold other people accountable in an honest, direct, constructive manner. Four, grit. We define grit as passion and perseverance. Five, work orientation. If you're going to run a business, you can't say, well, I'm going to come in at 9 and leave at 5. It doesn't work that way. Six, they've got to have ethics and integrity. We think that our number one core value as a company is do the right thing. And if you're a leader, you have to do that. Okay. Next is going to be follow the systems. We've developed a number of systems and processes that you have to do. And then lastly, we want people who are going to think long term, not short term. That's why we've had an opportunity to be a public company. We just wouldn't be a good public company because we're just not going to focus on quarter by quarter earnings.
And I want to take a step back for a second to, I think, a very unique period for everyone in real estate, but especially you guys, was obviously 2008 and the great financial crisis. But I think kind of a decision you made there really revealed the type of investors you guys are, in which I think the quote is, we simply decided we aren't going to participate in the global recession.
True.
And you acquired a lot of distressed assets.
Yeah.
It's much easier said than done to be greedy when others are fearful. You guys have put that into practice. How do you maintain that mental fortitude?
Mindset, belief, positive attitude, perseverance, grit, determination, belief in your models and your people. So it's all of those things there. And
Yeah.
by the way, you're absolutely right. Virtually everybody in the industry ran for cover. We did completely different and we ran toward the opportunity. And during that period, 08, 09, 010, 011, we made phenomenal buys. By the way, I didn't say we didn't have problems at some of our properties. We did, but we figured out how to manage those and then take full advantage of the opportunity. The other thing that really helped us was we had a great investor base that we had demonstrated by performance and by integrity that we were going to do everything we said we were going to do. So these investors, even though some of them nervous, said, okay, we believe and we'll have faith in you. And they got handsomely rewarded.
And another kind of, you bought out your partners in 2003, if I'm correct. Um, and I'm really interested in over the entire life of the Connor Group, what do you think were the most critical decisions that helped you scale from 400,000 to 5 billion in assets?
Sure. I'll give you one right off the top of the head. At one point, when we first started, we had apartments, but we also had some office, retail, and industrial. Within 2 years, I said, we're getting rid of everything and we're going to be narrow and deep. We're only going to buy apartments. We're only going to buy existing apartments. We're not going to do any apartment development. It's too risky. And and we'll build the business and expand based upon geography. That was one of the smartest things we could ever do. And we've stuck to the knitting and we haven't veered away, uh, since that period of time. So that would be transformative. Two, our whole operating model and how we continue to always change and improve has been a huge benefit. Three, we didn't look at how anybody else analyzed acquisitions, how they underwrote them. We built all our own financial and acquisition models that we have that are kind of proprietary. So we not only look at the quantitative component, we look at the qualitative component. We merge those two together. And if you look, we've done roughly 210 acquisitions over 30 plus years, and we've only lost money on nine, I think. So, and it's this relentless pursuit of excellence and the relentless pursuit of change and improve that I think have all really helped us, wrapped around with constantly trying to find, hire, and retain, the best people.
And when talking about people, a really important aspect to mention is culture. And you guys kind of are famous for a very unique culture, working Saturdays, no 90-minute lunches, six core leadership attributes, if I'm correct. How do you maintain this culture of excellence? Describe it. And how do you make sure so that it's excellent but doesn't become toxic?
Yeah. So when we interview people, we believe it's our obligation to be honest and direct with them about, hey, here are the pluses working here, and here are the minuses. And then also share with them that, hey, for a lot of people, this is not the right place to work. But for the right people, it's the best place they ever work. So I think that honesty really helps. And so some people just self sort their way out. And here's a phenomenon that you can greatly minimize any type of toxic environment. Get a bunch of people together who all have the same fundamental beliefs and philosophies. For example, high achievers want to work with other high achievers. They don't want to work with low achievers. Hard workers don't want to work with lazy people. People who really have grit and determination, perseverance, don't want to work with people who don't want to show up and make the effort and face adversity and overcome it. So it's really this alignment, okay? And, you know, we live by these core values. And we're not perfect, but hey, do the right thing. People count. Relentless pursuit of excellence, things like that. And so you tend to, have the people who are really aligned stay, and the people who are not will, leave.
Before we go back to the episode, I want to take a short break to talk about my sponsor, Row. The Generating Alpha podcast is presented by Row, the all-in-one banking platform for startups. Thousands of startups like Perplexity, Product Hunt, and more use Row. You get everything you need to manage your startup's cash. Fast banking setup, cards with up to 2% cashback, and yield that turns company cash into extra runway. All super important in the early days of launching. But the thing founders really love about Row is their team. They're obsessed with helping founders disrupt the status quo and will go to the end of the earth to help them to do so. And exclusively for Generating Alpha podcast listeners and viewers, you'll get a $1,500 statement credit plus a ton of exclusive perks when you manage your company cash with Row. Terms and conditions apply. To learn more, visit rho.co/generatingalpha. Row is a fintech, not a bank. Checking and card services provided by Webster Bank, member FDIC. See reward terms for details. Thank you, and back to the episode. And I want to take a second to touch on a couple interesting things about you outside the Connor Group. One of which is you've done 3 dives to the Mariana Trench, traveled to the International Space Station, won racing championships, competed at Le Mans, won the Baja 1000, flew an F5 fighter jet. What's the common thread between all of these?
Challenge and purpose. So almost everything we now do has to meet those two standards. Is it challenging? And does it have some type of purpose? The other thing, people tend to miscategorize us or me that as a thrill seeker. Couldn't be farther from the truth. We will not do anything that we don't think we can do safely and successfully.
And how do those things come about in your personal life? How does it come about that you dive to the Mariana Trench or visit the International Space Station? Most people don't do it. How does that? Yeah.
Yeah. So here's my take. Your mind is your greatest limiter. Most people can do a lot more than they think they can do. And so you either have to have self-belief or somebody outside tell you, hey, I believe. In my case, you know, maybe ignorance is an advantage. So I don't really ever think about what you can't do. And I think about the possibility of doing. And So it's kind of a shame, honestly, because I meet a lot of people that are really pretty talented, have abilities, things like that, but they don't maximize them. And maybe it's too hard. Maybe they're afraid. Maybe they're unsure. But, the first step to success is to try.
And this is quite a broad question that I think applies to that, but how do you think about risk?
I never take unacceptable risk, period. So in most cases, we're good, not perfect, but good at being able to quantify risk. I'll give you one example. In 2023, after a year and a half of work, we built the largest hot air balloon ever built in the United States. It was actually a firm in Ann Arbor, Michigan. Great people. That balloon was over 11 stories high. I and a team of 4 Air Force pararescue uh, took off from Roswell, New Mexico at the break of dawn, flew that balloon to 38,000 feet. And by the way, an open gondola, open basket, whatever you want to call it. And then the 5 of us skydivers stepped off there and set multiple world records. Well, I mean, they were so let's be clear. There were 4 professionals and 1 amateur. And yes, I'd be the amateur. But we trained so much and we practiced so much and we had all the contingency. By the way, we had a phenomenal balloon pilot with us and a great O2 technician. So it was a team effort. And so we were able to quantify and really limit through all of our training the risk. And then we just trusted our preparation.
And I want to touch on something more personal for a minute. If I'm correct, your son Colin has Down syndrome and works at the University of Dayton. You co-founded Colin's Lodge with him.
Mhm.
I'm interested how Colin shaped your perspective on what it means to live a meaningful life.
Yeah, so we are very blessed to have Colin. People will think, well, that's maybe politically just correct to say. That's incorrect. Uh, he's been, we have 3 kids, all of them great, but he's far and away the easiest one to raise. And he has such a positive attitude and so engaging and so personable. Like if you go to the University of Dayton and you walk around there, or the University of Dayton Arena where they play Dayton basketball, not that many people will say hello to me, and everybody knows Colin. So, you know, and so that populace of people, the problem and the challenge is once they get out of high school, they end up in free fall because most communities, there's not a good network of services to support them as adults. And so we identified that as a problem in, I think it was 2015 or 16, and said, we have to do something about it. Were we qualified to do it? No. Do we have expertise to do it? No. But do we have a determination and willingness to go do something that maybe people said would be impossible? The answer is yes. So we built this model called Collins Lodge. We have about 85 members. It operates kind of 5 days a week. And if you talk to the families of those members, it's been transformative. And again, we didn't build a model just to do one. We built a model to help other people and share everything. And by the way, we don't want anything in return. We don't want any money in return. We just want to help that special group of people. And
Incredible.
I would say the final point to that is, maybe to some of your listeners, if you've been successful and you've been able to make some money, we think you have both the opportunity and we would argue the obligation to try to share some of that with people who have been less fortunate. And so, whether it's Collins Lodge or the Greater Dayton School or other things we've done, that's just been our philosophy.
It's incredible. Um, and before I ask my final question, which I ask every guest, you have a unique perspective on this, and so I wanted to ask you this question of when people asked you about becoming a billionaire, you redirected directly to impact. I think you said there are far more important standards than money.
True.
Why is that your response?
Well, because I think it's true. It's a interesting phenomenon. Hey, I get it. All of us want to have a nice life. All of us need X amount of money so we can have a decent house and a decent car and take care of our kids and provide for them and go on vacations and give them an opportunity for education. Completely get all that. But in my experience, to measure happiness by how much money you have does not work. And I've met a number of people who have great financial means and are not happy, fulfilled people for a multitude of reasons. Conversely, I've met people, for example, we built kind of this revolutionary school to be a model for other cities across America. And if you look at those teachers, and by the way, the average teacher makes, I'll pick a number, $64,000, but they are so happy and so fulfilled because of the difference they're making in children's lives. So finally, I would say yes, I think there's a much higher standard than how much money you have. And that standard is based upon meaning and purpose.
And to finish it all off, this is one question I ask every one of my guests. I'm 16 right now. If you were to give one piece of advice to a 16-year-old today, it'd be life advice, career advice, and romantic advice, what would it be?
Aim high. Don't set limitations. Uh, you really don't know what you can't do. And try to think about what's really meaningful and important on a long-term basis.
Well, Larry, it's been an absolute honor. I really enjoyed it. I hope you did as well. Thanks for coming.
Yeah. Hey, happy to do it, Amir. Good luck to you.
Really appreciate it. Well, thank you.